If you have been a shareholder of IndusInd Bank in last 10 years, let me assure you, you will start believing in the word magic, because it's been a magical last 10 years for IndusInd Bank shareholders. The stock has given a CAGR return which is north of 40%. It's been almost 50x. And some would say that largely it was what was happening to the Indian financial sector, but it should also be credited to the man who has really successfully taken IndusInd Bank to a different orbit. So it gives me great pleasure to welcome Mr. Romesh Sobti on this special ET Now interview.
My pleasure.
Well, the shareholders have started saying we believe in the word magic. What incredible shareholder friendly decade it's been for IndusInd Bank.
Yeah, I think it's been a decent 10-year period.
If 50x is decent, then what is good?
No. So, the point is, it's always a story of riding the tailwinds and fighting the headwinds. I think personally, and this is not modesty, that we were able to ride the tailwinds pretty well. Now that means that you could smell the way the winds were actually blowing. And at this stage people come out with these mantras on what sort of created this sort of thing. I think it was first of all a bunch of like-minded people who came together with a common compelling objective, right? And that is to deliver value to a whole variety of stakeholders. Most of us came from, well, all five of us came from the multinational sector. And we came with this firm belief that you're going into a sector, which is the private banking sector, which has got an intrinsically advantaged business model. And how do you leverage that particular business model while you bring into play your experience of, say, the PSU bank, of which I have worked personally, and the multinational banks. So I think a series of beliefs shared by a like-minded team, people who came together. And that's why I've always said that it's never a one-man show. So, you've seen examples of one man coming into other institutions but not making a change. So the five-man team made a change. But of course, today when I count the number of people who really matter in the bank, it's 60 or 70. So the five-man team has actually grown to about 60 or 70. But like-mindedness, number one. Number two, I think at the risk of being immodest against, you would say that the strategy was pretty clear-headed. It was based on beliefs of the last 25, 30 years of banking, but more importantly, the daily execution of those beliefs and the strategy. I think that's very, very critical.
Shareholders, they've always focused on growth and profits. IndusInd Bank has managed to grow at a run rate which was 30 to 40% higher than the industry benchmark. I'm using industry benchmark rates. So for the better part of the decade, were you chasing profits or were you chasing balance sheet growth?
See, balance sheet, when we started, we were such a small base that showing 60% balance sheet growth was no big deal. But we chose to grow at 25, 30 because we wanted quality growth and therefore earnings profile. And the return on assets and the return on risk-weighted assets is really what drove us. Margins drive us a lot, this thing, growth, of course, is there. I mean, if you're growing 25%, you're growing better than industry, twice better than industry. So we didn't, just balance sheet expansion was never such a big driver for us. That means becoming big was not this thing, but becoming profitable was. So if you saw, when we did our first 3-year plan, it was not about scale and it was not about volumes. It was about profitability, productivity and efficiency. And that sort of became the measure of success. And those measures of success have played through these 12 years of the thing. So certainly we were margin driven, and margin means after risk adjustment. That was our drive.
So I'll take the clock back the first 12 years. You started with a low base, you started building a retail franchise. The tailwind was very strong because private banks were lending and PSU banks did not have the capital to lend. That worked in your favor. You created a technology-based platform. But as we wrap out of this, as you migrate to the next decade, you've incubated small businesses, a diamond finance business, vehicle finance business where you're very large now. You also have a big presence in rural because of Bharat.
Microfinance.
Microfinance business. Core banking was, let's say, 100% of your profit 12 years ago. Now that profit is less than 50%. In next 10 years, will that come down substantially and other verticals will start getting added up?
See, we are still subscale, I would say, in certain businesses. We are fully scaled up, I think, on vehicle financing with our market shares. And the last 2 years have enabled us to get even deeper market shares. In almost every category of vehicle financing, from two-wheelers to eight-wheelers, we have gained market share. I think putting more scale there is not. So we will grow in the usual, say, in the 20s. We will grow that other thing. Then I think in the diamond financing businesses where we are leaders, also I think it's not a question of building scale. That's really keeping quality going. And the margins are deep. So we are fine with that. Scale should really come into our non-vehicle retail assets. Okay. That's subscale. We've got 9 products in there. All are small. I think there's plenty of room for us to grow. So if you see our next, right now we are making our next 3-year plan. And that 3-year plan, one of the drivers is the retailization of our asset profile. So non-vehicle retail, so whether it's loan against properties or whatever you call loan against shares, credit cards, all those sort of things. Although we will keep our unsecured retail credit capped.
Okay.
Right? So that is where scale has to come in.
Has to kick in.
Yeah. And massive scale has to come into our rural coverage. Right? There I see tremendous potential to grow. So for instance, it's not just monoline microfinance lending that we will do through Bharat. It's so many other things. Right? So if I was to pay a compliment to Bajaj Finance, we want to be the Bajaj Finance of rural India. And we have the capacity and the reach and the coverage, right? Through the Kirana stores and through that. We've got 150,000 villages there. There we are going to bring scale.
But that's a space which some would argue everybody's trying to take a piece of, whether it is a fintech, disruptor like Paytm, even Bajaj Finance, because the rural India is unbanked, underpenetrated, and the demands will only increase. Will that be a competitive strategy because others are growing despite losing money?
No, see, that's why we start with we have a head start there. 150,000 villages under our belt, 10 million customers already in there, 2,000 branches already in there. We coverage of 23 states, 350 districts, right? So we have a head start. Captive to us. It's not a franchisee model that, I franchise, somebody else does it, a la Vakrangi, anything like that. It's a captive model. These are our borrowers who do that. So I think that deep penetration of deep rural, I think is not that everybody can talk about, that they have ownership. That head start is what we want to really, really work on.
If one really looks at the way the economy and the way corporate sector is moving, you use the word deleveraging. I would use the word lack of animal spirits. Every time when we've gone through an economic down cycle, corporates have put their best foot forward and they've really acquired assets and they've built large capacities. That is not happening. In India, there is surplus capacity. So for the economy to turn around, what will change? How will things change? And when do you think demand will come back? The problem for the first time I'm experiencing is not supply, it is demand. India has never faced a demand problem.
Absolutely true. I think this is a unique situation where it's not a question of supply side, it's a demand side of issue. Now you look at a typical corporate today, where does it find itself? Grossly over-leveraged. The capacity to draw more money to do more growth is restricted. That's why I'm talking about that deleveraging. Right? The debt equity ratios have gone out of whack. People have not raised enough equity. So I think first of all, this deleveraging will happen, equity inflows have to happen into these companies, and the risk and the appetite to do more will occur. Certain parts of the economy, like steel for instance, is ready for expansion. I would say steel is matched on demand. Steel prices move up and down, but it's ready for expansion. But what is happening is steel capacities are changing hands. That's about it. It's just going into stronger hands. So I think that demand, the two types of demand. One is, of course, we're talking of consumption demand. Why is consumption demand gone down? Why are you not buying two-wheelers? I mean, two-wheeler costs 50,000 rupees. What is this thing? Some degree of uncertainty comes in, right? And I think the other thing that's happening in India is that in the years preceding this slump, right, people dipped into their savings massively. Now they're saying, hello, I've reached my threshold. I don't want to dip more into
I'm
my
an Indian
savings.
ultimately. I need to save.
I need to save. I will not dip into that thing. That part is what is holding back demand certainly. Otherwise, why would I say? I mean, the aspiration levels are huge. Every guy who's got two-wheeler wants a four-wheeler. I don't believe that India suddenly is going Uber in every way. So people are still there. I think that risk appetite turns with some degree of certainty that my income will grow. That's what promotes spending. That's missing right now.
We are a $3 trillion economy right now. Somewhere in next 10 years, we will be a $5 trillion economy. IndusInd Bank right now is not in the top 3 in terms of market cap. In next 10 years, do you have a plan or thought or strategy in place that IndusInd Bank could be amongst the top 3 banks in terms of market cap? Are you eyeing that space? Are you that hungry? Are you that, do you have this kind of an aim in your mind?
There's 1, 2, 3, 4, these positions don't matter so much to us. I think what matters is the returns that you are giving. Whether I am number 1 or number 2 or number 3, if I give a 10% return to my shareholder, it's meaningless. But whether I'm number 6 and I give a 50% return, as we did in the past, that means more to us. Our focus is really to give higher returns. Quality of returns, sustained returns is what we don't want, that fluctuation of this thing. And I was looking at a chart today that, our 3-yearly return is to the shareholder actually is among the highest in the industry even today. That's what we would want.
It's an independent report which has come from Motilal Oswal, which also talks about it.
Yeah.
You think markets have been very harsh here when it comes to understanding the IL&FS problem? You were trading at a price to book of about 4 times for the better part of the decade, in line with what other good, well-run private banks are. Suddenly there is a big divergence. And that's only happened after IL&FS. Even though you've communicated very clearly, why are markets not respecting it?
See, the IL&FS cast a pretty wide and deep shadow across the whole industry. And if you have a valuation which is 4.5 times book, you have to double tick every box. You understand? Consistently, quarterly, you have to double tick. And in 1 quarter you don't double tick, or 2 quarters you don't double tick, then the market sort of works its way around. I wouldn't call it harsh. This is the way the market is. It was not that they were specially soft on us earlier, right? But our delivery was more consistent. So it's not that suddenly we've been beaten down. You have to double tick that box to keep those valuations. We will strive to get back into that, right? So our thing is not to curse the market or to curse the analyst or to say that thing. The analyst reports we respect. You listen to the analyst. What do you think? Maybe you differ on the perspective, but we don't. You've done your research, you come to this thing. So our thing is to get back to that, the better valuations through consistent return to profitability.
Will you be back on track somewhere in FY21, or could it be a long road of recovery?
No. See, I mean, if you really take out the that IL&FS, really part of it, you see we are still among the lowest credit costs. In spite of all those names being thrown about, what is the residual amount that they have left in our books? Of course we had them, but they didn't give us pain. They came into our book as a AAA, but they deteriorated into a B- or whatever, or a D, some of the other things. Yes. So I think that our focus is really, one is growth, margins, and then credit cost. Gross net NPA don't matter. What hits your P&L really matters, right? And if you see, even last year, if you excluded IL&FS, our credit cost was 53 basis points. It's among the lowest in the industry. And consistently over the last 5-7 years, we've been between 50 and 60 basis points, right? So maybe a little variation will happen here and there. But for a bank like us, to do 60, 70, 80 basis points is still best in class. Our strive is going to be to get to that figure. How the market rewards you is to be seen. But we must deliver consistency and we must deliver on what we say. That's what matters. So our focus is really that. What valuation it gives us, I don't know.
Yep.
Our job is to deliver earnings per share. Market gives you the multiple.
I did not want to use the word key man risk, but you used it. I'll take a leap from your question.
Yeah.
Key man risk. Shareholders would say, Romesh Sobti has managed to create magic. What happens after that? I know your answer would be, look, the board is fine and we have systems in place. But let's be, corporate history tells us that when leadership changes, not in a year, not in 2 years, but in 3 to 5 years, the culture and the companies and the banks, they change. How would you defend this question?
See, there's this, I told you about the 5 guys who came in together, that like-mindedness story. Today, I am now calling the top leadership team of the bank to work on our next planning cycle, the next 3 years. You know, I had to count 100 people that I would have to call. That's the bench strength we have created. One of my things, whether it's visible or not, has always been to expand the leadership team and the mentoring of the leadership team. It all happens by demonstration. I would say today that the like-mindedness has moved from those 5 to almost 100 people. I would not like to use the word indoctrination. Okay. But I think the like-mindedness has got, they buy into it. When we did our last planning cycle 4, the 2017-2020, I called 60 people for a workshop on thinking, what are we going to do? What's good for us? What's not good about us? And that's how the plan emerged. They buy into it. That's why I think creating the bench strength has been one of my most satisfying, I would say, features. And therefore, the legacies that you leave down are carried not by the guy who's going to come into the place, but there are 100 other people who are running the businesses. They carry the legacy. So I think that that key man risk we have defrayed across scores of people, right? And one of the features, of course, you saw, one of the features they never talked about in the market is that in 12 years, not one of the management team members left this bank.
Oh,
not one. Not one senior has left this bank. And I guarantee you this is how it's going to be. Even 3 years from now. They're as wedded to the businesses. All of them believe that the future is brighter than the past. Nobody is sitting on the last 10 years. Otherwise they say, hello, we did a lot. No, they say the future is better than the past. That's the slogan in the bank. So I think that this handing over the baton, it's a symbolic thing to one person. But that one person doesn't run the institution, I can guarantee you this, right? Of course, by demonstration, you create a sort of culture, if you would say that. And what's the culture we have created? It's a culture of performance, right? It's not any airy-fairy sort of things on culture or on softness. It's culture of performance, but sustainable performance. I think that's what we would leave behind. So I'm quite, and this has happened over the last 2-3 years, I'm quite sort of satisfied that the passing of the baton is an event, is a non-event in that sense, you know. It may be an event for the market. It's not going to be an event for the institution, I can tell you this. Because you will see there's speculation going on, the names and things like that. But continuity is the major, influencer of our decision on succession.
I want to know, what is the secret sauce which keeps you going at 70? What is the day like in your life? You know, with bankers, we have this image, oh, they are boring. They are always talking numbers. But bankers are beyond that, right? You need to understand life in a very holistic manner, world and businesses in a very real manner to start lending. So what is the day in your life?
See, every day begins with, I'm a incorrigible optimist, right? So even if the previous day has been lousy, I think the next day is going to be better. That keeps me going. That really is the story. What keeps you going at 70, I think, is genes. It's probably genes. My father in April will be 99, right? So I hope that some of his genes have come down here also as well. But I think really what motivates you is the feeling that more is to come, right? That expectation that more and better is to come.
Have you charted your post-retirement life? I mean, I'm sure your wife and kids would have some places which you always wanted to visit, which they would say, let's go after your retirement.
You know, about 4 years ago, when I crossed 65, when the extension happened, you know, we changed this business model at home. So, you know, this whole thing about doing things after retirement, and this was the guidance given to me by somebody whom I really respect. He says, why do you wait for retirement? You want to do a few things, who's stopping you? Do them now. So he said, after retirement, I'll start teaching. Hello? For 70 years you didn't teach, now you become a teacher. So hobbies are developed during your lifetime, career. You don't develop hobbies after this thing. I'll start reading. Why didn't you read for 70 years? That's not the way I see life. So I think we changed this model at home. And for instance, my wife and I do a short holiday every 2 months. We don't wait for, you know, June holidays, December holidays. That's for guys who have small kids. Our kids have flown. They have kids of their own in that sense. So in that sense, it's not going to be that suddenly you got more time to, you know, visit places and do that. We've done it in the last 4-5 years, right? That's how we kept things stable at home. Otherwise, this whole hue and cry about quality time with family and things like that. This is the way you spend quality time.
So, which is one annoying habit of yours? You know it's annoying, but you've not been able to change. It's a unique habit that is only Romesh Sobti's habit.
You know, this, I keep saying that it pays to be paranoid, right? That you keep anticipating, right? That means you're always living in the future, in that sense, anticipating, oh, this sort of thing. And then people keep telling you, please start living in the present, right? This is the typical, our philosophy, the Indian philosophy, live in the present and things like that. No, that annoys some people, that, you know, the fellow is paranoid. अभी ये भी होगा, ये भी होगा, ये भी हो सकता है. You look at all scenarios.
Anybody who's influenced you the maximum in your life?
Yeah, there's one particular boss. You know, I've had so many bosses in my 70 years. He was my boss in Greenlace Bank. That was a British bank, you know. He taught me how to, he really taught me how to create trust and how to trust people. And him I remember, and he's top of my mind, recall. He's alive. I met him, I think, 2 years ago in Delhi. Really, he says, first you test, then you trust. That's what he taught me. Testing and then trusting. And when you trust, don't test again.
What a wonderful way of judging somebody's personality or judging somebody's temperament.
Correct. So that I learned from him. So, you know, he would sign on a credit proposal which was going to London. In those days, it was a very large credit proposal. This thing. I said, you've seen it? You're happy? I'm signing.
At 70, do you still like receiving birthday gifts?
Who doesn't? But you don't want more of the same, right? Then it becomes a routine. So another tie or another belt or another thing. But if I like birthdays which give you experience. Experiences matter more than stuff and things today, you know. So gifts are always, the anticipation of opening a gift, whether you're 70 or 7, is the same.
You know, I'm going to close this very engaging interview with just one comment which I learned at the very early part of my career. And I saw a movie called Wall Street. Gordon Gekko, how can we forget him? And he said every man has a number which they're chasing in life. At 70, is there a number which you're chasing in your life?
Yeah, I want to be a centurion, yeah. So I hope my father will, he's 99 yes, in April. So I hope I'm the second centurion.
I'm sure you will. And you know, we've always spoken to you about banks and where the next quarter is headed, what's happened to the quarter gone by. But we've captured your true journey, not only IndusInd Bank, but of Romesh Sobti, a banker. And it's been, you know, one of those most inspiring and fascinating interviews I've done in my professional career. So thank you for your time and wish you good luck.
Thank you very much.